Hello traders! Today we'll be talking about a simple and powerful trading strategy. I'll be presenting you some concepts and principles that you can start applying in your trading. I really do believe that this is going to make a huge difference in your success. Now, in front of us, you can see a trade that I took on the past. It's a nice downtrend and I waited for the price to pull back into a level that I wanted and took the trade after seeing a nice signal and trigger. I will explain the thoughts behind it and show you another example in the end. Moving forward, what I will be showing you will not give you 100% winners, but will definitely increase your win rates. You need a reason to get into a trade. You read what the market is telling you. You can't get in a trade without understanding the market is doing and just try to guess what will do. It will not work out. There are thousands of strategies out there, but sorry to disappoint you, but I can assure you that there is no holy grail where you can win 100% of your trades. I do use price action because it's not lagging like all other indicators and show you what the market is doing. Is doing on the exact moment, not what it was doing on the past. Remember that all indicators are mathematical formulas of the past price action that you see on your chart in front of you. So all you really need is to see the price. Now, on the charts you see on the screen, it shows a really nice trade and setup that develops every single day and repeat themselves on all time frames, 1 minute, daily, 1 hour, whatever you choose. These trading opportunities are out there all year round, but obviously it's not, if you're not patient enough to wait for them, you will find yourself taking bad trades and eventually lead to you being on a drawdown and blowing your own accounts. So let's take a look at 4 concepts that you need to be focusing before taking a trade. Let's go into our lesson. So the most important things to your trading, in my personal opinion, are the 4 things you see on the screen. First, you need to understand what the market is doing on the bigger picture. If you are on a long trend where the market makes higher highs with higher lows, on the downtrend when the market makes lower lows with lower highs, or on a range. We only consider a long trend, a bull trend, to be invalidated if the market breaks the last lower low. And on the downtrend, we only consider invalidated if you break the last lower high. So, after understanding the sentiment of the market, you need to make sure you have an LST, a level, a signal, and a trigger. I cannot stress every single one of you enough that the level is the most important thing to look for. You need to be in area of value to take a trade and wait for the market to come to your level and never ever chase the market. It will not work out. You need to wait for the market to come to your level to take the trade. The level is where you look for the first sign that will indicate that the price is either going to continue in the direction of it intends to go, or it will give you any signal or sign that it's not going to continue and it may reverse. You have to look at the level as a brick wall. If the market and the price breaks your level, it will invalidate your trade because it's possible that the structure of the market is changing. On the other side, if the market breaks to fail it and creates weak rejections like these candles with small bodies and big wicks, or indecision candles, that is a candle without any body and 2 wicks, that's a sign that there is a depletion of the movement and that there is a high chance that the price is changing its direction and continue the bigger picture move. Combine these factors together and you may have a possible winning formula. But we need one more confluence, the fourth and most important factor in your candle formation, to indicate you that the volume and the momentum is increasing and identify us how to involve in the market who is in control. Combine these factors together and you possibly have a winning formula. But we need one more confluence, our fourth and most important factor, is the candle formation to indicate us that the volume and the momentum is increasing, and it identifies to who is involved in the market and who is in control. We may now look for a trigger with a bullish candle or bearish candle that breaks the box made by the signal candle. But remember, we only take trades that go according to our trend and the planned reversed at a range. If you use all these things together, we have a winning formula on the long term. But as I stated earlier, this will not make you win all your trades. So you have to apply money management. Let's move in our example and let's put all these most important factors together. So, before going to our live charts, just have a look at this example. This is the most powerful setup you can find. It will increase your odds, and you have better odds if you find this one. In here, you see that we are on an uptrend, and you need to define our LST to have a possible profitable trade. So, as you know, the market on a bull trend moves making higher highs and higher lows. And the best place to draw a level is the last resistance, which is the last higher high. And you may draw your zone that is the size of the wicks of the candle. Now we wait for the price to move and wait patiently for the price to pull back to our level. Then when it gets there, you watch for any sign of exhaustion or indecision candles and draw a box around your little candles like this. To complete our winning formula, you wait for the price to break the box and may take the trade. But for better odds, you should wait for the candle to close outside your box before taking the trade. This is just an example of a good setup that you may find every day. Your stop should be below your support, and you should always take at least a risk reward bigger than 1.5. Now let's look at real chart examples and a little bonus to increase your risk reward ratio. In here we are on a daily chart, and you see that the market is going up without breaking his structure. Now we see a break of the structure of the market, and we may see a change on the market sentiment. So let's wait and see what the market is doing and not chase our trades. In here you see a break of the low, so it's possible changing to a bear market. We see a pullback. It's our first pullback, so we do not take this one. And we are on a bear trend. You may draw a trend line if it helps you to see the market move. Is making lower lows with lower highs. We broke our low, so we may now draw our level as a box in the wicks and wait for the market to move inside it. And here we are inside our level. So now you may look for a trade and wait for a signal. First thing to do is to wait for our signal candle that shows us that we are on an exhaustion. Here it is, our signal candle. That is an indecision candle with a really small body and wick above and wick below. We draw our box around it and wait for the market to gain his momentum and see if it goes long above or bear below. Now we broke our candles, so you may take your trade. stop above at least 1.5 and let it move and see where it goes. As you can see, this trade was a winner. Not all trades work like this one. This was just an example to show you how you can take your trades. As you can see, you needed to wait really patiently for this trade because you start waiting on this candle, and this took us exactly 46 bars or days to complete our trade. And you may ask, how do I increase my profits? How do I increase my risk reward ratio? So you draw your box and you wait for the break it, right? You go to a lower time frame, like 1 hour time frame. You come back and we broke it in here, and you may wait for the price to come back to your box that it was, how do you know, the support last time, and now is a resistance. You wait for the market to come here, and as you can see in here, we are on a bull structure. The market is going up on this small time frame, right? What can you wait for? You can wait for the markets to come back in, go below, pull back again to your little and small area, and now you may think in taking your trade. I would take the trade below here, that this one was your indecision candle, these both, and you may take the trade in here with a better risk reward, because now you can use your stop just above here, and increase your risk reward 1 to 5, 4, and on a daily you add a 1 to 2. This is how you can trade if you wait patiently and wait the market to come to you. I'm sure that you may take a lot of trades with really good odds, and you'll probably make a lot of money on your markets. So if you want to learn more, just wait for the next video.